Today I'm just going to look at moving averages and show you how we use these on a chart. So I'm just looking at the stock Iluka Resources. As you can see here, these are the moving averages, these colourful lines. Basically a moving average is the average price over a certain amount of periods. So for example, say it's a 20-day moving average, the average price for the last 20 days, and this can be calculated on the close, the high, the open price, or the lows. I generally do it on the close, so depending on where the market closed for the day is where the moving average will calculate its point. These generally are a good way to see if a stock's trending. They're also used as levels of support because it's generally a mean, or say an average price for where the stock will come back to. So your longer term moving average will be a stronger sort of level. So this one here is a 195 day. The actual figures are up here. So the black one's a 195. The pink one is 41. 55 is the green. 21 is the red. 13 is the blue. Those numbers are Fibonacci numbers, and these are actually exponential moving averages. So what they do is they basically place a higher weighting to the most recent price action. So say the more recently that the price has been moving a lot, the moving average will react stronger to levels of price movement more recently. So they're basically just a more accurate way. Well, I find it more accurate and use these. So for example, I'm just going to give you a bit of a rundown. When you see the moving average or the price above the long-term moving average, which is the black line, generally it'll be considered as an uptrend or a powerful sort of move. A trading buddy of mine, a good friend, actually invented a system called the gate system. So the gate system is basically, as you can see here, where these EMAs have fanned open and they're opening up. It's basically the gate is opening, and then when they come back to a moving average and then they open again, is basically when you want to get long. So we'll buy the stock. So as you can see here, they all crossed above the moving average, the long-term moving average, and then they all opened up as the price accelerated higher, and the trend generally would be defined as up. So when it moved back to an area of support, so on this moving average, would be potentially a good buying opportunity, and then you just follow the gate open again as the trend continues higher. Basically the price, they can't go up in a straight line, so they do tend to pull back and they'll sit on the moving average and find a good area to buy as it continues to move higher. So as you can see here, the price was really moving at quite a rapid rate because the furthest it got back to was its 21-day moving average, which is the red line, whereas here it was coming back to the 55-day on the green. So you can see here, price was accelerating faster, continued the uptrend, and all the EMAs continued to spread open as the price continued to run higher. Up here you can see had a bit of a consolidation, and now obviously it's taken off again and continued higher. So basically a very good stock, very good uptrend, and the basic gist of this is to show sometimes if a stock's in a good uptrend, you don't need to get out until the trend is broken, or a moving average. So here you might be of concern when it did break these lows and came back, but it was still supporting on this moving average. The trend would only generally change, I guess, when they look for moving average crosses. So should the pink line be crossing down below the black or crossing down below the green, say, will be when it potentially changes trend. So I'm just going to quickly have a look at the Dow, which is the American market, and I'll just run back here. So this is back in March. So you can see the pink line is obviously under the black line, but all the moving averages, your short-term moving averages, began to cross back through your longer-term ones. So down here, the whole way down from 08, continued the downtrend. When they crossed through, the trend was changed and it began to move higher. Obviously here, big sort of dump, volatile times. As it retested the long-term moving average, fell away, and then broke through, obviously, and as you can see, the trend continued higher for quite a period of time. As you can see there, broke down, tested the long-term average and continued higher, and then here, obviously, this whole period right here seems to be an area of consolidation and not much movement before, obviously, the trend resuming here, and then the market moved higher. The one thing that, at the moment people are looking at is, I guess, is the market turning? One way to have a look properly at that, I guess, is the other video we looked at was the swings. So one thing of concern is that this could potentially be a lower swing top. Lower swing top generally could be a change of trend, as you can see there, lower swing top, and it continued down a little bit lower. So one thing we certainly are looking at now would be if that is a lower swing top, and then basically if it will come down to, say, your green or longer term moving average, or if worse comes to worse, your very long term moving average down there, which is the 195. Will it do that? I'm not sure. Just sort of trade based on what we see in the market, and generally if you see a lower swing top, it's hard to get too bullish and go too long until you sort of can find a reason to buy it again. Certainly following the trend and buying it at the green line is not a bad idea, but just make sure it stops it tight and you got to have a plan in place. That's all for this video.